Everybody was looking the wrong way. 4 months now, the cameras, the headlines, the whole conversation has been about one metal and one metal only. Gold, gold, gold. New records. Central banks piling in. And while every eye in the room was fixed on that one shiny object, something else quietly picked itself up off the floor, walked to the front of the stage, and started to run. If you own silver right now, I need you to sit with that for a second. Because the thing about silver is that it does not announce itself. It does not lead the parade. It waits at the back, ignored, called the poor man's metal, dismissed by the same people who tell you it is too volatile, too small, too industrial to matter. And then, when almost nobody is paying attention, it moves. Not gently, not politely. It moves in a way that leaves people who owned it stunned and people who did not owning nothing but regret. In the next 20 minutes, I am going to show you why the quiet metal is the one to watch, and why the fact that nobody is talking about it is not a reason to relax. It is the whole point. Here is the first thing I want you to understand, and it is not a price, and it is not a prediction. It is structure. The silver market is tiny. Compared to gold, compared to stocks, compared to the bond market, the entire above-ground, investable silver market is a rounding error. And that matters enormously, because when real money finally decides it wants in, it is trying to pour an ocean through a garden hose. The same demand that barely nudges the price of gold can send silver vertical. That is not a theory. That is arithmetic. A small market with a long fuse. And silver has a second quality gold does not have. Gold is hoarded. Silver is burned. Nearly every ounce of gold ever pulled out of the earth still exists somewhere, in a vault, in a ring, in a bar, sitting still. But silver gets used up. It goes into solar panels, into electronics, into the tiny contacts and coatings that run the modern world, dispersed in amounts so small it is not worth anyone's while to recover it. It gets consumed and it does not come back. Which means the world has been running a supply deficit in silver for several straight years now, drawing down the stockpiles that were built up over decades, quietly, to cover the gap. Demand outrunning supply, year after year. And that shortage does not care what the screen printed this morning. So when I tell you silver just broke out while everyone watched gold, I am not describing a lucky day. I am describing what happens when a market that small, with a base that tight, finally catches a bid that the whole world has been aiming at its bigger, slower cousin. The gold story pulls the money in. The silver market is where the pressure has nowhere to go but up. Now let me take you somewhere, because I want you to feel this and not just hear it. Go back with me to the end of the 1970s. For most of that decade, gold had been the story. It was gold that captured the imagination, gold that people wrote about, gold that had climbed and climbed as inflation ate the dollar alive. Silver was the afterthought, the junior partner, the metal your grandmother had in a drawer as old coins and flatware. And then, in the space of a few short months heading into the very start of the 1980s, silver did something that has burned itself into the memory of everyone who lived through it. It went vertical, not up, vertical. In a matter of months, the price of silver multiplied several times over, racing toward a number near $50 an ounce that had never been seen before and, in the way it happened, has barely been believed since. Picture it from the inside. Picture a man who had quietly held silver for years, watched by his family as a bit of an eccentric, the fellow who bought the metal nobody wanted. And then the phone starts ringing. The local coin shop has a line out the door. People are pulling the silver out of their attics, their jewelry boxes, prying coins out of collections, hauling flatware to be melted, because the price is moving so fast that ordinary people who had never thought about silver in their lives suddenly could not think about anything else. That is what a small market looks like when momentum takes hold. It does not crawl. It detonates. And I want to be honest with you about the other side of that story, because I am not here to sell you a fairy tale. That run did not last. It could not last, because a good part of it was built on leverage and speculation and a squeeze that eventually broke. When it came down hard and fast, and people who bought at the very top, in the frenzy, at the line outside the coin shop, got hurt. I will come back to that, because there is a lesson in it that could save your retirement. But do not let the ending blind you to the thing that actually matters here, the thing the financial media will never sit you down and explain. The lesson is not that silver is dangerous. The lesson is how far and how fast a small metal can travel once the momentum arrives. It showed the world its ceiling. It showed the world what it is capable of. And here is the detail almost nobody mentions. At old high, near $50, adjusted for what a dollar was worth back then, sits somewhere up in the low three figures in today's money. In real terms, silver has never once reclaimed the peak it hit more than 4 decades ago. Sit with that. The all-time high, properly measured, is still out there, untouched. Which brings me to the enemy in this story, because there is one, and you deserve to know who it is. When silver starts to move, when it presses up against a level it has not seen in a generation, do you know what happens? The people who profit from your fear go to work. The trading desks, the big banks, the financial channels that make their money on your churn and your confusion. They do not want a calm, informed holder of physical metal. That person is no use to them. They want a nervous one who can be scared out of a position at the bottom and lured back in at the top. And the single most powerful tool they have is the one they never explain to you, because the whole business model depends on you not understanding it. Let me show you exactly how that works, because it happened in plain sight not that long ago. Back around 2011, silver climbed all the way back up to that same ceiling near $50, more than 30 years after the first time it touched it. And right as it got there, the price collapsed by roughly 30% in a matter of days. Now, ask yourself the obvious question. Did the mines suddenly flood the world with silver? Did solar panels stop needing it? Did the deficit vanish overnight? No, nothing fundamental changed at all. What changed was the cost of holding a paper position. The exchanges raised the margin requirements over and over in quick succession. They moved the cost of holding the bet, not the value of the metal. And a wave of leveraged traders got flushed out, and the price cratered, and the financial media wrote it up as if silver had failed. It had not failed. It had been squeezed by a lever most people watching did not even know existed. That is the game, and it is exactly why nobody on the financial channels will say this to you plainly. I want to pause here, because we have arrived at the first place in this story where I have to talk to you directly, retiree to retiree, about what is actually at stake for you. If you are in your late 50s, your 60s, your 70s, and you have built up $100,000 or more in a 401k or an IRA, then this is not entertainment for you. This is your life's work sitting in accounts that are, right now, almost entirely tied to paper. Stocks, bonds, the dollar itself, and the people who manage the biggest pools of money on earth, the central banks, the ones with the best information anyone can buy, have been quietly voting with their vaults. They have been buying physical gold at a pace the world has not seen in generations, more than 1,000 tons a year, 3 years running, roughly double what they bought the decade before. They are not doing that for fun. They are doing it because they understand something about paper promises that they would rather you not think too hard about. And here is what almost no one tells the ordinary saver. You are allowed to do the very same thing they are doing. There is a completely legal, established way for an American with a retirement account to move a portion of that savings out of paper and into real, physical gold and silver held inside the account you already have, without triggering taxes and without early withdrawal penalties. It is called a self-directed precious metals IRA, and it is not some exotic loophole for insiders. If you have $100,000 or more in any retirement account, this is for you just as much as it is for any institution. I have put together a free retirement protection guide that walks through exactly how it works, in plain English, no jargon. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. It costs you nothing and it obligates you to nothing. It just puts the same door the big money uses within reach of the people the big money would rather keep out. Now, back to where this is really going. Because here's the part that actually changes the picture, and it is the part almost nobody gets to. For the last couple of years, gold has been the leader. Gold set the records. Gold got the headlines. And that is exactly what you would expect early in a move like this, because gold is the bigger, calmer, more institutional metal, and the big money always walks through the wide door first. But watch what happens next in these cycles. Late in the game, silver stops following and starts leading. It moves faster than gold. It closes the gap. And the way you measure that gap is a simple ratio, the number of ounces of silver it takes to buy a single ounce of gold. When that ratio is stretched wide, it is telling you silver is historically cheap compared to gold. And when silver finally wakes up, that ratio compresses, hard, as silver outruns the very metal everyone was watching. We have seen a preview of this in living memory. Cast your mind back to the spring of 2020. In the panic of that moment, silver was crushed, driven down toward the low double digits while the world was selling everything it could. The ratio of silver to gold blew out to an extreme almost never seen, well past 100. Silver had never looked more forgotten, more hopeless, more left for dead. And then, over the following months, it did what it does. It came roaring back off the lows, running up hard while gold moved more slowly. And that stretched ratio snapped shut as silver outran its bigger cousin. The people watching gold did fine. The people who understood silver did better. Much better. That is the pattern. Gold leads you to the party. Silver is where the party actually is. So think about where we sit now. Gold near its records, the headline metal, the one on every screen. And silver, after years trapped beneath an old ceiling, has climbed back to multi-decade highs, pressing against a big round level it has been coiling underneath for a long time. This is not a metal falling apart. This is a metal that has spent years building a base, the longest, widest base most of us will ever see, and is now leaning on the door. A sustained push through that level is the kind of thing that, in a market this small, does not stay quiet for long. And the beauty, if you are the calm holder rather than the nervous one, is that all the attention is somewhere else, on gold, which is precisely how the biggest moves in silver have always begun. Not with a spotlight, with a room full of people looking the other way. Now I owe you the honest caution, because I would not respect you if I skipped it, and because the people who only ever show you the upside are the ones you should trust the least. Silver is volatile. It is the most volatile of the metals precisely because the market is so small, and that same smallness that can send it vertical can also send it lurching down in a way that will test your stomach. There will be shakeouts. There will be days and weeks the media uses to tell you it is over. Everything I have laid out here is a case, built on structure and history and the behavior of the smartest money in the world. It is not a guarantee. It is not a promised price, and it is not a promised date, and nothing I say is personal financial advice for your particular situation. What it is a way of seeing the board that most people your age are never shown. So let me tell you how to think about your own position, as principles, not a prescription. First, own the metal, not a paper promise. The whole lesson of the squeezes and the margin games is that a paper claim can be moved against you by people you will never meet. Real metal, or metal held for you inside a proper structure, cannot be margined out of your hands by a trading desk. Second, size it so a drop can never force your hand. The people who got hurt in that old blow-off were the ones who were all in at the top and had to sell. If you own it in a size that lets you sleep through a 30% shakeout without panic, then the volatility stops being your enemy and becomes the thing that eventually pays you. And third, do not sell into the shakeout. The entire machine I described to you is built to separate you from your metal at the bottom. Refusing to play that game is by itself an edge. And this is the moment I most want you to hear, because it is the whole reason this matters right now and not someday. You are early. I do not say that to flatter you. I say it because it is true, and because the window when it is true does not stay open. The smart money already sees this. The central banks are already positioned, buying the physical, quietly, month after month. But the mainstream has not caught on. The pension funds are not here yet. The financial media is still pointing at gold, still calling silver too small to bother with, still explaining yesterday's drop instead of tomorrow's setup. And that gap between what the smart money is doing and what the crowd has noticed is the entire opportunity. Because by the time silver is on every screen, by the time your neighbor is asking about it and every advisor is recommending it and it leads the evening news, the easy part will already be behind us. Nobody sends you an invitation to this. Nobody is going to call you and tell you the quiet metal just became the loud one. By then, the line is already out the door. Which is exactly why I want to make you an offer, for those of you who have stayed with me all the way to here, because you are the kind of person this is actually for. Beyond the free guide, I hold a private, one-on-one educational web conference for viewers who have $100,000 or more in their retirement accounts and who watch this whole video through. It is free, it is genuinely educational, and there is no pressure and no obligation. On it, we walk through your actual situation, what you hold, what you are exposed to, and whether moving a portion into physical metal inside your existing retirement account makes sense for you. And here is the honest why now, with no fake countdown clock attached. The best time to think clearly about protecting what you have built is precisely when nothing feels like an emergency, when you can make a calm decision instead of a scared one. That window is open right now, while the crowd is still looking the other way. If you are watching on your TV, scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com and mention that you watched this all the way to the end. So did silver just break out while everyone watched gold? Yes. And now you understand why that sentence is not a headline, it is a map. The gold story is real, and it pulled the money in, and it drew every eye in the room. But the quiet metal at the back of the stage, the one that gets burned instead of hoarded, the one small enough to run when the big money finally aims its way, the one whose real all-time high is still sitting untouched up in the low three figures, decades later, waiting. That is the one that moves when nobody is looking. Go back one more time to that man in his kitchen at the end of the 70s, watching the phone ring, watching the line form outside the coin shop, watching the forgotten medal in his drawer become the only thing anyone could talk about. He did not get an invitation either. He just understood, before the crowd did, what a small market does when the momentum finally arrives. Everybody else was looking the wrong way. Now, you are not. That is the whole edge. Use it while it is still yours to use.